Welcome in everyone to the Investing in Real Estate show. I'm Clayton Morris, founder of Morris Invest. So glad to have you here. We are a full service rental real estate company. And on this channel, we aim to help you become a more intelligent real estate investor, whether you're just starting out or you are more advanced. So let's dive into it. Today, I wanted to talk about really an inevitable part of the real estate investing journey. If you are a real estate investor, it's the tenant turnover that we need to talk about. I get this question all the time from new investors, and it's a fear-based question because what they're saying is, I fear this house being vacant for some time, right? And if you think about it, that is your cash flow machine. You're hoping that you're making an investment in a property that is going to produce monthly cash flow. Now, for some reason, this is one part of the investing process that seems to scare new investors. You know, what is a tenant turnover? So you may be asking your question that right off the top. What is a tenant turnover? It's simply when a tenant moves out and the rental property is cleaned up. It's remarketed to a new tenant and it's rented. It's as simple as that. Now, trust me when I say that tenant turnovers are just part of this business. I mean, you've got to build this into your formula. You know, when you're doing your analysis, when you're doing your data, one of the reasons why we're so successful at what we do at our company is that we're analyzing markets for years before we move into that particular market. So one of the key things that we're looking for is vacancy rate. Now, let me tell you this. In the United States of America right now, we are in an affordable housing crisis. So there's incredible demand for rental properties and new construction rental properties. So if you are in a market where the vacancy rate is high, that should be a red flag. I would not be investing in that town. We want to be in areas where the vacancy rate is low. And that means that when a tenant moves out of a property, we can fill that property in 1 to 2 weeks, or maybe a little bit more, depending on the weather, the time of the year. If it's the holiday, something like that. But most of the time, it can happen very quickly if you're in a good market that has a demand. The properties that we build, we have a waiting list for tenants in those properties because they're new construction. They've got stainless steel appliances, granite countertops, vaulted ceilings in many of the properties. So a tenant wants to be in that property. If one moves out, there's already a list of people who are looking for a 2-bedroom, 3-bedroom, etc., and can move in quickly. But it's just part of the business. And I think people get so scared about it for no reason. I mean, think about it. Have you ever moved? Do you know anyone that's ever moved? I just moved. I mean, I literally have boxes around me right now. So there's always going to be that process, moving out. We just actually moved out of an apartment, a rental apartment. And it was all cleaned at the end, but there were a few little minor pieces of damage that we had to deal with. There was like a towel rack that came off. There was a soap dish thing that came detached from the shower. And through no fault of our own, it was just like an old and rusted thing, and it needs to be fixed before a new tenant moves in, if it's a good landlord. I mean, do you know anyone who's moved recently? Of course. Everyone's moving during this pandemic. And people have changing circumstances all the time, and you should not expect that your tenants are going to stay forever. Let's get that out of the way and out of your head. Tenant turnovers happen. Don't panic about it. Don't let this derail you from your overall big goal. It's simply a tiny moment in the big plan. I have commercial real estate investors, those people that buy 100-unit apartment complexes. And those 100-unit apartment complexes, there's like a 10, maybe 20% tenant turnover in those particular properties. There's always tenants moving in and out and in and out. It's just part of the process. Fortunately, as residential real estate investors in homes that have large backyards and bedrooms, our tenant turnover is much lower. That's why I'm not a big fan of commercial real estate investing. So instead of worrying about these tenant turnovers, you should prepare for them. Build it in to your numbers. I always say your ROI formula should account for expenses. Okay, your return on investment formula should account for expenses, including vacancies. Now, here's what you should expect. Look, as your tenant's lease nears to a close, your property manager is going to discuss with them if they'd like to renew their lease or if they're planning on moving out. It's a simple question. We know that about a month and a half or 2 months ahead of time, 3 months, it depends. Are you planning on staying? Are you planning on moving? Great. So if the tenant is moving, then the property management team is going to inspect the property, determine what types of repairs need to be done. This can be anything from just a deep cleaning to drywall repair and painting. I mean, I've damaged drywall, putting up pictures and a chunk came out. It's not the end of the world. Drywall. That can be fixed. That can be painted. Replacing carpet. After a few years and cleaning, replacing carpet is normal. And so on. There's going to be other things you might need to take care of. They might have had a dog, and it might have, scratched the door to try to get out, to go to the kitchen, out to the backyard or something like that. So that might need to be sanded and patched and fixed, or a door replacement. These are all wear and tear items, okay? Property management team is going to decide what needs to be done to make your rental suitable for the next tenant. And think of that as a good thing. You're making a great home for your tenant while also keeping up the maintenance of your investment. The tenant turnover process can be one of the most expensive parts of running a real estate business. Those expenses can vary, but it can add up quickly. Not only are you paying to repair the property, but you're also missing out on rental income at the same time. So I'm fixing this place up and now there's no one living in the place. Scary, but it doesn't have to be. That's why it's important that, number one, you prepare and you build that into your ROI formula. And number two, that you work with great property management companies. Now, I don't want you to feel shocked or panicked when you hear about an upcoming tenant turnover. I get them all the time. We get emails from our property management letting us know that they're going to extend the offer of a renewal of the lease for a tenant in our property. We would like to keep the rent the same price. We think we can increase the rent or keep it the same based on the market conditions. Or the tenant's planning to moving out. They're relocating and moving towns. Okay. Remember, you're a responsible investor. So it's normal to feel a little uneasy. But you've done your due diligence. A tenant turnover is not going to make or break you. If it does, then perhaps you shouldn't be a real estate investor. If a tenant turnover is going to break you, then you're cutting things too closely, my friend. So let's talk a little bit about actually dealing with these expenses. How do you deal with the tenant turnover expenses? Depends on how you bought the property in the first place. This is very important. So if you're working within a self-directed IRA, then your IRA custodian and property manager will have to account for those expenses through the self-directed IRA. Remember, all of the expenses for that property will have to come out of that account. You cannot pay for a new water heater or drywall repair out of your own pocket. Cannot do that. If you are paying for a loan out of your rental income, then you'll need to make sure that you have a couple of months of loan payments set aside so you don't default on your loan. Have a few rental payments set aside to cover it in the case of a tenant turnover that could take longer than usual. This is all part of your accounting for those expenses. How you pay for these expenses can vary, but no matter your situation, the most important thing is that you have a plan. So when, and not if, your property manager alerts you of a move out, you want to feel confident and prepared that you're ready to handle this process. I don't want you to be scared about it. That's why it's so important to have a great team, a great property management team in your process. Or if you are managing the property yourself, make sure a few months ahead of time, you've got it built into your software where you're reaching out to your tenant. You're going to walk through and do an examination of the property, do all of the things that a great property management team would do for you. And that's why we work with such great teams at Morris Invest. If you want more deep dives on these videos to learn more about this entire process, watch my videos on return on investment. That's the next video you need to check out in this series. We'll see you next time, everyone.